We started the day down nearly 400 points in the Dow, but now we're down just 0.5%. If an escalation like this can't shake the markets, can anything shake the markets at this point? For more on this, let's bring in Craig Columbus, CEO of Columbus Macro, also Chris Zaccarelli, Chief Investment Officer for the Independent Advisor Alliance. And perhaps we'll say, Craig, and start with you. This was so interesting to me because even when I saw the headlines and I saw the market reaction, I thought to myself initially, why isn't the market down more? Why isn't the market down more?
Some of it, I think people expected a more volatile geopolitical year because of these sanctions in Iran are really starting to take a bite on the regime, and they are sort of acting out. This was a preemptive move. But I think the conditions that are still in place, right? We don't have the same like we had last year in the sense that first half of election years tend to be volatile, and we're not going to have the Fed switching on a dime from quantitative tightening to quantitative easing, but still slow and steady economy. Fed is buying short-dated treasuries. Wages are growing faster than inflation. And you still have the China trade deal. By doing it in phases, you have a phase one deal, which was pretty modest. But the fact that nobody can get too bearish, because by doing it in phases, you can still roll out good news in the future. So the conditions that pushed us higher last year are still in place today.
All right, so Chris, does this kind of give you some comfort then, this idea now that markets aren't, and investors and traders aren't reacting, violently one way or the other given this news? And is this, in your mind, a change in market regime or just more noise that investors should kind of gloss over because the fundamentals in the U.S. and globally are still somewhat intact?
Well, I would say it's probably the latter. If you really look at the regime change, that change happened last year when the Fed went from tightening to easing. And so we're still in an easy money regime. The economy is still doing well. We are seeing it move along at a pretty good pace. You're seeing consumer confidence is high and spending has followed that. So really, everything's in place for the market to keep moving higher. However, you do have those geopolitical risks. And what happened last night is just one example of that. So whether it's Iran, whether it's North Korea, there's always going to be risks to the market. And if things were to spiral out of control and really ratchet up higher, as the former guests were saying, then you may want to reassess. But in light of everything that we've seen so far, based on this action and some possible Iran counter reactions, for the most part, really the underpinnings are still positive. And I think that's why the market is being pretty resilient to what would otherwise be a somewhat upsetting and surprising move in other market regimes.
Chris, just to follow up on that, then where would you be looking to invest? Is the energy complex still attractive? Is it technology, which has been a leadership group for a while now? So where exactly do you go and where do you stay away from?
Well, I think if you look at what's just happened recently, the knee-jerk reaction is to move into energy. I would actually caution the opposite, and I would really say you want to look at what's been working and what's likely to continue working throughout the year in the absence of some really big change. So I do believe if you look at technology, where you've got semiconductors that had been doing well up until recently, but have a lot of legs behind them. You look at within industrials, there's the industrial conglomerates, as well as looking within financials. I think those larger banks, those larger investment banks should be resilient. Today's a day where all of those sectors have been down, and it could be an opportunity to really position yourself for the rest of the year. I wouldn't let last night's events dictate what you do for all of 2020. I think for now, this is a short-term story.
All right, Craig Columbus, Chris Zaccarelli, thank you guys very much for those thoughts on the market given this Iran situation.